Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In today's video, I want to speak about gold because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the entire technicals for gold. Then we will move to the COT data, so the commitment of traders, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move on the pair. Now, starting here on the monthly, what we can see is that at the moment we have a market which is testing exactly the previous monthly support, which is now turned resistance. From here, all this move to the upside was created. We then had the break below the support. At that point, all that previous support was turned resistance here. So as we are testing previous monthly support and resistance, we could expect a potential rejection to the downside. We can also notice how we did have an impulse and correction, and in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. And if we do that, we can notice how we have exactly the 0.32 Fibonacci retracement lining up with the previous monthly support turn resistance, creating confluence of supply and resistance that we could expect definitely this market to reject to the downside is definitely a possibility. Going down on the weekly time frame, what do we see? Now, here on the weekly, it's clear that we're currently testing strong supply. From here, all this rejection lower was created. At the moment, the market is testing exactly the same zone from which there is the possibility to see a rejection to the downside. So from a weekly perspective as well, we do have resistance and supply here from which we could expect more bearish price action to be developed. Going down on the daily time frame, what do we have? Now, here on the daily, it's quite clear that the market is currently creating a deceleration pattern in the form of a rising wedge. Now, usually when you see a rising wedge, at some point you expect a break below structure. And after the break below structure, you expect a retest of that structure, which was essentially previous support, turn resistance. And that is where you have the highest probabilities of seeing a potential rejection lower. Now, in this specific case, as I have already identified by placing this rectangle here, the previous daily support and previous daily low essentially is exactly here. This is the last time that the market went to the upside before then starting this move lower. So until the market here will it remain above this daily support, it can easily continue higher. However, if we do get a successful break below the support after the break on the retest of the previous daily support and resistance, that is where we could expect a potential rejection to the downside. Now, I did speak about gold a few times in the past. I spoke about it after this impulse to the upside. From here, I wanted to see a rejection lower. That is exactly what the market gave us. Then we had the creation of this W from here. I made another breakdown explaining all the reasons for which we wanted to see a rejection lower and completion of the W formation at the neckline. Again, that is exactly what the market gave us. And then from here, essentially what I wanted to see is a break below structure, which we still haven't seen. But at this point, this is the last area of support that the market created. So this is the new structure support that I would like to see this market break in order to provide a potential setup, because otherwise it will simply continue to move in a very narrow range without any big moves. So nothing really interesting. And by the way, I will link in the description all this previous analysis, so you can go and check them out for more free education. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for gold, what we can see is that with the last report, we have seen once again increase in net positioning. We went from 115k to 125k net positions. However, it's already clear that we are starting to see a lot of shorts getting added on the institutional side of the market, with 2.4k shorts added with the last report. Now, it's also important to keep in mind that today we will have the new report which will be released. Now, that would I wouldn't be surprised to see in the new report that at this high, where institutions were at the highest profit on their longs, they started closing their longs and taking profits before Christmas. And that is essentially, in my opinion, what created this rejection to the downside. If we will see that in the new report, so essentially longs getting closed, that would be very bearish because it would indicate that there is definitely the possibility to see a break below the support. So if we do get the break below the support, we will also see institutions add more shorts on the retest. Here, we would have good probabilities for a potential rejection lower. Now, how we could be approaching that move? As usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing after the break on the retest is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge upfront discount on the lifetime access price of the mentorship program from 497 euros all the way down to 97 euros for lifetime access, one payment. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can get a full refund credited back into your trading account. But this is only if you want, you're not forced to join them. Now, if you scroll lower, you will see that at the moment there is still time to join before the timer goes to 0 and the offer expires and price goes back to normal. However, spots are limited, so if they get filled before the timer goes to 0, the offer will end anyway. So I really suggest that you take advantage directly from here to gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.